What's up, everyone? I hope you're having a fantastic day. So today, what I'm going to be showing you is how to use ICT concepts in the 5 seconds chart. Now, before I show you this trade on this video, I want to let you know that this is highly dangerous, highly risky, and only participate if you know what you're doing. I feel like I'm understanding more about these concepts that I am beginning to see them even on the seconds chart. So this is going to serve as an example as to how I interpret the markets using ICT's concept. So, don't come crying to me in the comments saying that you lost 2% for trying to trade into 5 seconds. Okay, so let's dive into this trade. So this is my 98-second mark, right? I already know that this is already a confirmed swing high. So what do we know about swing highs is that they contain liquidity. So if price is going to come back up here, I would like to see a reaction of some sort to bring it back down lower. But I'm gonna keep my eyes open. Price hasn't delivered to there yet, so I'm gonna keep diving in. Okay, so now I'm gonna go into my 15 minutes chart, and we're gonna experience another swing low, right? Because look at the bodies of these candles, right? This low went lower with this candle, and then the next candle was a little higher. So this is my 3-bar pattern, breaks pattern through here. So this is a confirmed swing low. And again, one thing to keep note of is that based on our previous higher time frame range, we want to make sure that we are trading in premium, right, to sell. But in this case, we're going to be focusing on this range in particular. All right, as we dive in closer, notice how we're getting closer and closer to our point of interest. So here we have our swing low. We have this candle closed at 109.08.1. This one opened at 109.07. So this body was lower than this one, and then this one was a little higher than this one, but together these 3 bars create a 3-bar pattern, and it was broken out after this by this candle. So this is going to be our intermediate structure, right? Where internal liquidity lies, right? So now because we're focusing on this range, this intermediate range here, we want to be participating. Remember, we're going to buy on discount, sell on premium. So let's lay out the foundation. Okay, that's good. So again, notice this. Oh crap, this was the trade, right? So let me show you the trade here. So the trade has already occurred, but I'm going to be showing you guys in a backtest session so you can see that these concepts are legit. As you can see, if we take notice here on the 2-minute range, is that we have an imbalance. So already we have a good foundation as to how price is going to react off this. We would like to see some incentive or some price action here that's a fractal so that we can take it up for higher prices. Okay, so now we're just going to wait. Believe it was there. Yep, here. So here I was studying the seconds. So I was looking for reason for calls for price to go up for higher prices. So if we start diving into the seconds here, you'll notice there's an order block. So this is already coming out with a pretty good point of interest. We have an order block inside of imbalance. So we already know that price should be rebalancing this fair value gap in order to take it up for higher prices. If we look closely even more, this is where we start diving into the seconds, okay? So here in the 15 seconds, what do we have? Same 3-bar pattern. 1, 2, 3 gets broken out through here. So now we understand that this candle here has liquidity. Now things are getting much clearer, right? We have imbalance here. We have the imbalance box inside an ORB, and now we're tagging into buy side liquidity. And in addition to that, if we back up just a bit, you'll notice something else too. You'll see that in the 1 minute, there you go. And now our swing high is confirmed, right? Why? Because this candle broke this 3-bar pattern. So now we know that we are in a market maker sell moderate completion, right? So I'm going to mark this, right? Again, we are in discount inside a very interesting point of interest, right? We have this fair value gap, OP, buy side liquidity here on the 15 seconds. And then now we're looking for our fractal. But look at what happens when we go into the 5 seconds, right? We want price to break above this level. Why? Because here, again, same thing. 3-bar pattern again, swing high. 1, 2, 3, breaks down. Boom. We already know that this is a swing high confirmed. And so now we're waiting for the market maker to pretty much break out of this, give us cause to enter, and we're going to take it up for higher prices. So here we go. Okay, perfect. So we broke out at higher prices. But look at how it's given us. This low was higher than this low. So I'm already suspecting that we're going to be entering a mitigation block. And again, mitigation blocks, we need to enter inside a fair value gap or an imbalance because again, it's the same thing. We're taking over swing highs. If you allow me to inverse this chart a bit, you see it's the same thing that ICT teaches us in the 2022 mentorship. What happened? we break above old swing low, right? And then in here, in this internal liquidity structure, we break down through this swing low. And then look at this. What do we have here? We have that fair value gap. So what do? You go into a buy. Sorry, let me re-inverse it again. We go into a buy, set up a stop loss right here, and then we take it up. How high? We're not sure. We could aim these highs up here. We could bring it up to premium again, or we could bring it up to these highs as well. The point is that you take it up here, or you can do something else that I've been trying out on. Is that we could do the standard deviation stuff. I'm still new to this method, but it's been something that I've been curious to learn more about. So if we take the reverse of that, we're expecting price to tag us in here. Perfect. So we're tagged in, take it up, and then, oh, here we go. You could base off your standard deviation as so. I like to take these highs here. I'm still learning this myself, so please, if once I become more literate in terms of explaining this, I'll make a video on this as well. But now this is pretty much how I base my trades out of. I'll take it to the -4 standard deviation, and yeah, off we go. And again, this is the 5-second chart. So when price is behaving in this manner, I would have already made my trade a break even. You know, just to play it safe. But again, we're trying to aim for these highs in order to again bring it back up to premium pricing. You'll see that this is the 50% of this higher time frame range. We took this lower time frame swing high market maker sell model here, and again, once we finish the model, we are in deep discount, so we want to look for cost to buy. And what was our cost to buy? We got our mitigation block right here. This red box is our mitigation block. Why? Because this was a swing low that was higher than the previous low, and not only that, it had an institutional sponsorship which took over a previous short-term swing high. So now we're looking for our entry, which is an imbalance inside an OP, or just the fair value gap. Because again, this is what he taught. This is what we were taught in the ICT mentorship 2022. So that's our OP right here. But if you want to be a participant, you could set your stop loss to this low, because price shouldn't be going down that further low. So anyways, on to the trade, right? Again, we're already down to break even, so I don't really care if price brings us back down to break even. But yeah, this is it. And notice how it targeted. I'm gonna pause it right here. Notice how the trade went up to this -4 standard deviation, almost to the pip actually. It's mind blowing when you start seeing these things, right? Even on the seconds, you start trusting the system more. And if you have a good understanding or a good grasp as to what your entry really is, then you know trades like this are so possible. I'm really excited that I'm seeing these things now. And it's crazy how many times this stuff repeats itself. Again, this is not easy. It definitely takes an eye to start understanding, but once you do, it's like, man, you start getting exposed to what the market really is. And it's kind of scary, to be honest, but it's also very empowering, right? Because if you know how to see this, if you know when to take action, you're going to be able to make money like so fast. I mean, again, this was the 5 seconds, right? So you would have been tapped in what, like at 224, and you would have been out by 230. You know, so that's 6 minutes of holding, and you know, just a 2.27 our trade. If you risk, you know, a percent or two, you know, like that's you're way ahead of the game. All right, so this is what I wanted to show you in case you're still trying to learn the ICT concepts. I'm still learning them as well, but I'm beginning to get the confidence that I'm able to explain it somewhat. And if you think I'm doing a pretty bad job, some people doubt in the comments as well. But yeah, this is the ICT model being traded in the 5 seconds. And this is how I'm using those concepts to create my entry. And hopefully it's helping you understand better how is it to take in this information. And because yeah, my opinion, I tend to learn more when I see other people do it, and so I try to get little details from their systems and I try to implement them into mine. And yeah, this is what I've been coming up with, and I'll just keep working on this stuff, and yeah, we'll see where this takes us. So yeah, let me know down in the comments, and I hope you have a good one.